Hi, I'm Logie Bylot, and this is the Creative Real Estate Investing Guide. It's my weekly video blog post, and today I want to talk about real estate as an ideal investment. And the reason we say ideal is because of the 5 letters, I, D, E, A, and L. I for income, D for depreciation, E for expenses, A for appreciation, and L for leverage. Income comes from collecting rents and other fee-based services that we can provide to our tenants. And this is a great market for buying income-producing properties because prices are a little bit lower than they've been for quite a while, and we can buy them and be able to cash flow. That's critical because effectively our tenants can buy houses for us. The next is D for depreciation. Depreciation is a tax benefit, kind of like a phantom benefit, because we get to take write-offs for depreciation when we pay our taxes. Later on, the government will reclaim that depreciation and they'll get their tax dollars, but it's almost like a free loan from the government, which helps to make rental properties more affordable. Additionally, if we use strategies like 1031 exchanges down the road, we might even be able to defer or potentially eliminate ever having to pay tax on the depreciation. So that's the D. E, that's expenses. All of the expenses we incur with real estate that's rental property are completely deductible. So we get to deduct those from the income, thereby lowering the tax bite. A is for appreciation. Now granted, we may be in a flat market right now, but going forward, we know prices are going to recover. We've seen these peaks and valleys many times before in the real estate industry. This is just another one. And so appreciation is growth of the value of the investment. So good example being the house my parents bought when I was a kid. They paid $10,000 for it. The same house today is worth probably $250,000 to $300,000. What other investment can you find that someone else is going to pay for and create that kind of return for you? Imagine if you had bought 5 or 10 properties, held them for 20 or 30 years. What would your net worth be? Especially if you had good, reliable, rent-paying tenants that were helping you to make those mortgage payments. It's a powerful way to accumulate great wealth. And finally, leverage. Leverage is the ability to use a small amount of money to control a large value asset. The best example I can give you is if you were to buy $100,000 worth of stock and that stock grew by 10%, you would make $10,000 on your 100. Whereas if you were able to buy a house and put $10,000 down and control that $100,000 house, what would happen is when that house increased in value by 10%, yes, the $100,000 asset would have now been worth 110. But remember, you only used 10,000 of your money. So effectively, your 10,000 in investment generated $10,000 in growth. That's real leverage. Anyway, there are lots of great techniques that we can talk about in future videos about ways to use leverage and to buy houses with little or no money down. Thanks for visiting today. Happy investing.